Good afternoon and welcome to the Wealth of Advice Market Update on Friday the 14th of August 2020. So, another fortnight has passed since our last update. The big news this week, the UK entered its biggest recession in history. Since they started recording GDP figures many years ago, it's the biggest, deepest recession we've ever faced. However, on the very day that this was announced, which was Wednesday, you'll see from this graph here that the UK stock market, the main index of the top 100 companies in our country, actually rose by 2% on Wednesday. We had people ringing us up, people sending emails asking what's going to happen to my investments now the biggest recession in UK history is being announced. Well, that recession started many months ago. The markets knew about it. It was a historical fact. The markets went down when this was happening. If you remember back in March into April, when the country went into lockdown, which is what caused these figures to come out this week to happen, that's historical news. What the market always will price in is what's going to happen in the future. So the markets went up on Wednesday. They actually fell again on Thursday. They're expected to be flat today. We're going through that sort of period of time when the markets are quite volatile. But one of the issues that you have right now is still uncertainty as to where the markets will be heading over the next few weeks and months, because nobody knows really what the recovery is going to look like. But what we can see all around us is that companies are getting back to work, the roads are busier, the shops are busier. Hopefully in September the schools are able to get back and people can get back to more normality. And what I would therefore predict, well, when the next inflation or GDP figures or a look at recession comes around in the next quarter, it will be very positive. Obviously, because we're starting from a very low base, things will increase from there on thereafter. What we wanted to try and get across on this week's presentation was to try and give you more positive news. Obviously, in the week that the news channels were sort of going overboard telling you how deep this recession was, a lot of the good news that might be out there will be overlooked often. The Bank of England decided to keep the UK interest rates unchanged at 0.1%. Weirdly, they could have reduced interest rates so they went negative, but they felt that wasn't a healthy thing to do, and they also felt it wasn't necessary. So that in itself is a sign that things aren't as bad as what they could possibly be. When we talk about the reduction in GDP, which is the total output of the country, the forecasts a few months ago were expected to be minus 14% this year. Well, the latest forecast, based on obviously more data as the year's gone on, is now expected to fall by only 9.5%. So that shows that the country has reacted quite well to sort of the unforeseen events that was put in front of it, and it is coming out of the lockdown, and as we said earlier, businesses are starting to get working again. So those negative forecasts are not as negative as the ones were. They're a little bit more positive, so it is reasons to be positive. The Bank of England also expected inflation to start coming back and maybe get back to its 2% annual target within 2 years. Again, another positive thing. Certain levels of inflation in an economy is good. We'd said on previous presentations how the oil price falling had a negative impact on inflation. Prices of energy, of travel costs, other things would go down. So overall, a 2% target being achieved in the next couple of years is going to be a positive thing. We've mentioned previously about UK house prices being in a good position, hence why the housing market is moving again. It was announced in the last 24 hours that anyone on holiday in France, Holland, Malta, I think was listed, one or two other countries coming back to the UK from the weekend will face quarantine. This is the UK government stepping in quite quickly to impose quarantine restrictions, so that if anyone who comes back to from these countries having a holiday will face 14 days of not being able to leave the house. The government believes they're being very proactive in doing this. It's protecting its UK residents from people coming back who may have the virus. And I think what you're now seeing is the government trying to appear to be more proactive. Obviously, it upsets a lot of people who are on holiday in these countries, but the government will tell you that this is a positive thing to keep the rate of infections in this country lower, and the positive obviously from that is that businesses continue to work, businesses continue to grow. Hopefully, as I say, the schools can go back in September and that normality will remain. So the next graph you can see is the UK Purchasing Managers Index. The Purchasing Managers Index is which managers or which directors, which shareholders in these companies are buying shares in their own company. And the theory being, if that you're going to buy shares in your own company, it means that you are positive about that company's fortunes. A bit like insider trading. If you're working for a company who you know sales is going to be good, manufacturing is going to be good, you might buy more shares in that company. That index rose to 58.1 in July. The benchmark is 50. Anything below 50 suggests negative. The managers in their own companies are not buying their own stock. So below 50 is very negative. Above 50 is positive. It was 55.3 in June, but it was down to 28.9 in May. So what that shows you is over the period of June and July, is now into August, that this Purchase Managers Index is becoming more and more positive. That, as I say, is definitely a sign that the UK is heading in the right direction. And the final bit about UK news this week is the confirmation that the data has shown that the UK construction industry has risen at its fastest level since October 2015. So, as a summary of what's going on in the UK, yes, we heard the negative news about the recession on Wednesday being very deep, very low, but there is very, very positive signs coming through from various elements of the UK economy that we're back on the right track, and hopefully markets and everything will respond to that over the next few months. In other news, in the US and around the world, lots has been going on as ever. The American presidential election is now 12 weeks away. Joe Biden, the Democratic candidate, earlier this week announced Kamala Harris as his running mate. Many believe this is a very shrewd move in the polls, as you can see from this graph here, which was taken from the Financial Times website. It's got Biden at around about 50% of the vote and Donald Trump 41% of the vote. Obviously, anyone looking at this might say, well, the Brexit polls were wrong, the 2016 US election results were wrong, and nobody predicted that the Tories would get an 80-odd seat majority in our country back in December. So polls need to be taken with a pinch of salt. But I think markets are now starting to believe that Biden may win this election, and if so, how is that going to affect markets? T. Rowe Price, the US fund manager who we deal with, have said it's not really going to change markets a great deal in the short term, but the positive that may come out of it may be that relations between the US and China may improve as a result. There's also soured relations between the European Union and the US. If that can be improved, markets should like that. And as I say, this is not a political broadcast in any way, shape or form, but we're just looking at what will markets be positive with. In other news around the world, Australia has been on the news quite a bit, imposing lockdowns after they saw a spike in coronavirus cases, and they were announcing only yesterday that although they imposed their latest lockdown on August the 3rd, I think it was, that they're already starting to see infection rates reduce. Hopefully, this is what all countries around the world will do if infection rates start to go up, impose a localised lockdown, get the infection rates down, and then we get back to normal. So I don't believe we're going to see a market collapse like we did in March when you do hear the word lockdown being imposed again. Certainly didn't happen in Australia. I don't know whether this is positive news or not, but Vladimir Putin announced earlier this week that they will have a vaccine ready in October to administer to Russian residents. This provides a lot of worries to various scientists around the world who are saying, how can you possibly give a vaccine to so many people when it hasn't had all the clinical trials and all the tests that would normally go into play? But I did read that some foreign scientists were saying, well, actually, from our point of view, that might be positive because we can see any problems or anything that may go wrong there and adjust what we're doing over here. But like most things that go on in Russia, you don't know the full extent to what they actually are doing or what they have got, but we'll just have to wait and see. But in general, if a vaccine is starting to be administered from October and it is positive and it works and other countries can sort of come up with something similar in the next few months, well, the markets will love that and the markets will increase. But it's certainly not something to hang your hat on at this stage. So a fortnight has passed since the last update. As usual, we'll go through the various graphs showing how various markets have done around the world. So since the 31st of July up until the 13th of August, so the last 2 weeks, you can see from this graph that the UK FTSE 100 is up over 5%. It's still lower than where it was in June, but certainly it's positive the fact that the markets are showing some growth over that period of time as well. And again, for one of the first times we've shown this graph, the FTSE 100 has actually done a lot better than the world index and the S&P 500. hopefully, again, positive news, again, on the back of the UK having the deepest recession announced on Wednesday. This graph shows that over the longer run, things are picking back up and things will hopefully continue to do well in the future. The next graph we're looking at, UK GDP throughout the global financial crisis from 2007 to 2009, shows how UK GDP fell all the way through 2008, reaching a low point in 2009 of -4. So just in comparison to what news we had this week, which was -20, you can see, as I say, even through the biggest financial crisis in history, which was 2008, what happened earlier on this year was much, much deeper. But again, it was obvious. We put the country into lockdown, everything stopped. So it was always going to be a really, really negative figure. And again, just to reiterate, things are coming back up. So when we have the next quarterly update, you will see a much more positive news stories, I'm sure, that day. So again, we come to that point of the presentation where we're giving you an update on that notional £100,000 invested in the Risk Score 2 and Risk Score 3 portfolios at the middle of February, so February the 18th I think it was, that was starting from. Everything started to go south from there, and as we've said numerous times during this presentation, the worst point was down to the end of March, and then things have recovered. We're not quite back to the 100,000 figure, however, we're not a kick in the backside away from it, so definitely positive. The numbers are up from when we did the presentation a couple of weeks ago. We're now up to 98,779, and there's only £10 difference between the Risk Score 2 and Risk Score 3, so they're virtually identical. So what's that, 1.2%? Below where we were at the end of February. Got to be happy with that. Again, client who was in yesterday, who was in Risk Score 3 portfolio, we showed him that he had 3.5% growth over the last 12 months. So from August last year till August this year, 3.5% growth. If you'd been on another planet and just landed back here and weren't aware of all of the news stories that had happened, and someone had presented you with 3.5% growth on the backdrop of Brexit not being sorted out, China-America relations souring, not even mentioning what happened with the coronavirus, you may accept that 3.5% during such a time might be acceptable. In the long run, we would hope most client portfolios increase by higher than 3.5% a year, but then when you factor in what happened in March and how it's recovered, we think that 3.5% figure for the Risk Score 2, Risk Score 3 portfolios is definitely acceptable. Other clients who have the Royal London portfolios, we keep reminding them they're a little bit more cautious, don't have as much invest in the stock market. Their growth over the last 12 months isn't as high, but we expect that to sort of pick back up and hopefully at least match that in the coming weeks and months, especially as the UK moves to get some kind of deal agreed with Brexit. That's obviously been out of the news again in the last couple of weeks, mainly because most MPs are taking their summer holidays, and I think the Brexit talks are due to pick back up again in early September. So maybe we have an update on that in the next presentation or two that we do. We're certainly keeping an eye on it and certainly keeping talking to all the fund managers who manage our clients' funds. So we now look at the graph showing the performance of the Royal London portfolios from the end of February till now. Just like the Risk Score 2 and Risk Score 3 portfolios, they're yet to get back to that level where they were at the end of February, not too far away. Again, some of these portfolios with Royal London are a little bit more cautious, a little bit less invested in the stock market, and we fully expect these to recover like everything else in the coming weeks and months. In the next presentation or two that we do, we're certainly keeping an eye on it and certainly keeping talking to all the fund managers who manage our clients' funds. Thanks for listening. We'll be back with an update again in 2 weeks' time. Obviously, as we've been saying, if something major happens in the interim, we will be in touch. Thank you and goodbye.